Internal controls, a very important aspect of running a business. These are policies and procedures that are meant to, among other things, safeguard the assets of the business and ensure the accuracy of financial information that is reported. One aspect of internal control, for example, is segregation of duties, where you take a process and you assign different parts of it to different individuals to prevent misappropriation of funds or theft. For example, if you go through the drive-through, you will notice that for that restaurant, the person who takes your order is different from the person who collects payment, is different from the person who actually gives you the item or items that you ordered. In this chapter, we're going to be focusing on controls regarding the most liquid assets of a business, which is cash. So we're going to be looking at the petty cash fund, which is a system, an imprest system that allows you to adhere to the guideline that says all funds should be dispersed by check. At the same time, you don't want to be writing checks for small sums of money. So you get around that by setting up what is called a petty cash fund. In this particular problem, problem 6.2b, we have this company that has determined that the petty cash fund amount is going to be $100. And so the entry to establish the fund is to debit an asset called petty cash fund and credit another asset or decrease another asset called cash. Notice that the entry to establish the fund does not change the amount of money that the firm has at this point. It just moves it from its checking account, for example, into this special fund called the petty cash fund. The check would be cashed, and the person in charge of the petty cash fund would be given maybe denominations of 10, 5, ones, and in addition to coins. And notice in this problem that it says that the money is placed in a secure place. And so now the person in charge of the petty cash fund is responsible for making sure that that fund is accounted for at all times. In other words, if you did a surprise audit of the custodian, you should be given either receipts, vouchers, or cash totaling $100. And so one of the ways that you ensure the accuracy is by keeping a record. Now, in some businesses, they may not have it as formal as this is. They may simply keep the vouchers and the receipts, and the accountant would then tabulate these disbursements. And so you will notice, based on the payments that were made, we tabulate the amounts into different categories. And so, for example, you will see here that we have a column where we keep a record of the actual payment, and then we break it down. And so if it's for supplies or tips, we put them in the appropriate columns. Over here, we have two additional columns for non-expense items. So for example, we don't normally pay for advertising, and so they create a special account there for that. Or the owner took money from the petty cash for personal use, and so that's not typically one of the columns, and so we just put that into the other category. But in any case, we are keeping track of the amount. And so you can see a total of $96.50 was spent, and the remaining cash is $3.50. The $96.50 plus the $3.50 equals the fund of $100, and so all the monies have been accounted for. And so what we do is we take this report and we just put it in the form of a journal entry so that the information gets recorded in the account. And so back over here, that's all we did. We debited each account and we credited. Notice we're crediting cash, however, not the petty cash fund, because what happens here is that the custodian, the person who is holding the petty cash fund, is going to be given cash of $96.50, which he or she will then add to the remaining $3.50 to bring the fund back up to $100. So the only other time that the petty cash fund would actually be used is if you were going to increase the fund. Let's say we were increasing it from $100 to $150. Then we would debit the additional amount to the petty cash fund and take it out of cash. Or if we were decreasing the fund because we figure, okay, that's too much, then we would credit the petty cash fund and put the funds back into the cash account. Okay, so the only times that you use the petty cash fund is to establish the fund, as we did here, if you wanted to decrease the fund or if you wanted to increase it. But the replenishment is simply an entry to debit the accounts for the disbursements and to credit cash because another check is going to be written. Now, one other thing here, there's a special account called cash short or over that is used to facilitate possible errors with the petty cash fund. So let's say, for example, we disperse $96.50, but the remaining cash was $2.50 instead of $3.50. Well, in that case, it means that we have a shortage. And so we would have to give the custodian that additional dollar, but notice it wouldn't have been for an expenditure, and so it goes into the cash short or over account as a debit. So there would be an additional debit here for $1, and we would actually write the check for $97.50. The same would be true if we had not an overage, but we had more funds. So in this case, let's say we had $4.50 left over instead of $3.50, even though we spent $96.50. In this case, we would credit the cash short and over account for the $1, and we would write a check for $95.50 instead of $96.50, again, bringing the fund back up to $100. So there is really no situation where someone should be taking money from their wallet or their purse to make up the difference. It should be where the cash short and over account is used to record any shortage or overage in the petty cash fund. Let's move on now to the other issue with regards to our internal control, and that is bank reconciliation. On a monthly basis, firms should prepare a reconciliation, and reconciling means that you're having two things agree. So in this case, we want to reconcile the record of the bank with our record. So we're looking for two balances to begin with. We're looking for the bank statement balance, which is going to be found on the bank statement, the ending balance, and so that's what gets reported here. And then we're looking for the balance in our ledger as of that same date. So this is the end of the month, the end of July, and so what is our cash ledger balance? That's given to us in the problem, And so that would be recorded here. So we have our two balances, and you notice that they do not agree, and understandably so, because in banking there is going to be a timing difference. When we write a check, immediately we record it as a deduction from our account, but the bank has to wait until those funds are presented. When we make a deposit, we immediately record it as an addition to our account, but again, that needs to be processed by the bank before it shows up on the bank account. And so when you get your bank statement, those of you who are in banking, you know this, it's possible that you will have checks that were written by you but not yet presented for payment. They're called outstanding checks. And you will have deposits that you have made that have not yet been added to your account. They're called deposits not yet credited. And so when we're reconciling, we're looking for items that we have recorded that the bank has not yet recorded, and we're going to take those items and adjust the bank statement balance. And then we're going to look for items that the bank has recorded that we have not recorded, and we're going to use those items to adjust our bank or cash ledger balance. And so you will notice here that we had a deposit for $630 that we had made, but those funds did not appear on the bank statement. It could be that it was made after 4 o'clock on that particular day, and so it didn't appear on the bank statement. And so we are going to be adding that amount to the bank statement balance, because we're saying that when the bank processes that deposit, it will increase this balance by the amount of the deposit. That's the only item that we added to our account that the bank has not yet added. And so we move on to outstanding, outstanding checks. And according to the analysis, there are 3 checks that we wrote, but those have not yet been presented to the bank, and so they're referred to as outstanding checks. We subtracted those 3 checks from our cash ledger balance, and so we would want to do the same thing, because that's what the bank is going to do when they receive those checks. And since those are the only items we have, we are now finished, and we have our new or adjusted bank statement balance. And again, when you get to this point, you would compare this with your cash ledger balance. They are not equal, and so we know we have more adjustments that need to be done. Well, based on the information in the bank statement, we realized that there was a check for $37 that was returned. It was non-sufficient funds, and so we will need to deduct that item from our ledger balance, because when we first got the check, we added, but the check bounced, and so we will now need to deduct. The same thing is true for a service charge. The bank had a debit memo for the service charge. Remember, on the bank's books, the checking account is a liability, and so a debit would be a decrease for the bank account. So in our books, it's going to be a credit, which is a decrease. And so we have the $23 here. The same thing is true for the $18. We made an error with the amount that we recorded, and so since we had recorded a smaller amount, we need to deduct the difference so that the correct entry is recorded. There are some individuals who would reverse the first entry and record the new one, or in this case, you could just simply record the difference. And so we have a total deduction of $78, and when we subtract that from our balance in the cash ledger, we have $1831.30, which matches the adjusted bank statement balance, and so we have reconciled the two balances. Remember though that these entries here, all of these items here, were not yet in our ledger, and so the journal entry that appears here will be and must always be for the items that we use to adjust the cash ledger balance. These items up here, we already recorded them, so we would not be journalizing anything from here. But down here, we said that we are deducting, so all of these are going to be credits. So we do the first one, which is an NSF check. So notice that we're increasing our receivable for $37 and we are decreasing cash, right? Because the customer had paid us, but the check bounced, and so we need to restore the balance in their account to show that they still owe us the $37. Then down here, we have a miscellaneous expense for the service charge. Some banks, or not banks, but some businesses would have it go into a service charge account. Others just put it in miscellaneous. It just depends on how your business or the business that you're working for decides to categorize such items. And the same thing is for the last item. We had recorded an amount that was too large. And so what we're doing here is we're debiting accounts payable. We had recorded an amount that was too small, I'm sorry. And so we're debiting accounts payable to decrease it, and we're taking the additional amount out of our cash account. And that is it for our bank reconciliation. So again, internal controls, this has to do with how we safeguard our assets and ensure the accuracy of the information that is presented to the readers of the financial statements.